The chief guest of this day, GKR sir and Venkatramanan sir to come on the dais. I request Ramji to escort the speakers as chief guest of the day. So very good afternoon to one and all present over here again. This is the second CPE seminar of THENI CPE chapter of SIRC of ICAI. The first seminar was conducted in THENI itself. It's with a grand manner, like we have inaugural session as well as a one-day CPE seminar. After that, we are having this seminar. First, we have a session on tax audit. That is the comprehensive analysis of tax audit for the assessment year 24-25, which will be handled by the esteemed CA Venkatramanan sir, a senior most person from Dindigul. His extensive experience and deep understanding of tax audit procedures will undoubtedly provide us with valuable insights and practical knowledge. In the second session, we will delve into the Union Budget 2024 direct tax proposals. And friends, I am pleased to inform you that CA KRISHNA Raju sir from Chennai has graciously agreed to step in and deliver the presentation on the same topic. We are grateful for his support and look forward to his expert analysis. I would like to express my sincere gratitude to all our distinguished guests and speakers who have joined us today. Your presence is highly valued and we are honored to have you with us, sir. I'd like to thank our organizing committee and all the members who have worked tirelessly to make this event possible. Finally, I would like to thank each one of you for your presence and participation. Especially CA Mitra Madam and CA Kaniraja, CA Srinivasan, CA Chandrasekhar sir from Bodinayakanur, CA Ravindran sir, CA Muthuchami sir from Dindigul, CA Bala sir and CA Ramji sir from Periyakulam, and CA Balamurugan sir and CA Jansirani Madam for your august presence here. Your enthusiasm and commitment to continuing professional education are what make our events successful and impactful. Friends, I am confident that today's sessions will be highly informative and engaging, providing us all with a deeper understanding of the latest developments in tax audit as well as direct tax proposals. Once again, welcome all and thank you for being here. Let us make this event a grand success. Thank you. Thank you so much. Venkatramanan sir, please. Venkatramanan sir, first start. I request CA Bala sir to honor GK sir.
Poster Twitter. Sir, CA Venkatramanan had his school education in St. Mary's High School, Dindigul. After completing his pre-university class in GTL Arts College, Dindigul, he had his commerce degree done at St. Joseph College, Trichy. He underwent CA articleship training under CAK Subramanian and Dindigul and passed his CA exams in 1976. He has been in active practice since then. He also got his post-graduation diploma degree in Information Systems Audit in the year 2003 itself. He has presented papers of academic and general interest in various areas. His interests are reading and listening to classical music. And some of the posts he has held and is holding are past president of the Rotary Club of Dindigul, past chairman of Rotary District Assembly 2004, past trustee of Dindigul Rotary Educational Trust, past president of Auditors Association of Dindigul, honorary secretary of Dindigul Fine Arts Academy, past management committee member of Madurai branch of Institute, certified peer reviewer. He married to Ms. Uma Ramanan on 9th February 1979 and is blessed with 2 boys and 2 granddaughters and 1 grandson. Elder son is engineer by profession and younger one is chartered accountancy by profession, and he is accompanying his father. Thank you.
Let me first thank Madam for giving me a nice introduction. And I thank the office bearers of the THENI CPE committee for inviting me to this CPE program. It was a pleasure on my part to come to THENI after a very long time. Because we had been visiting THENI for cases after THENI was bifurcated from DINDIGUL. Then now it is everything faceless. We are not able to meet anybody person to person in any of the offices. I still recall the days in late 70s and early 80s where income tax camps were conducted in Saraswati Nagar High School here. The income tax officers used to camp here for 3 days or 4 days and hear the local cases at THENI itself without disturbing these persons to come to Dindigul for presentation. Then there are camps at Periyakulam, Palani. So it was a nice time that we also come from there, stay here with officials. And I recall those days in the Saraswati Nagar High School campus where we have been presenting the cases. So green in memory, of course, it is more than 4 decades if I am correct. So thank you for giving me this fresh recoup of those old memories. I think there was one lodge called Pandian Lodge here.
Oh, it's not this.
No, it is not there. We used to stay there. And the topic they gave me was tax audit. And Jagdish, when he was talking to me, he told that it will be exactly by verbatim, it was comprehensive analysis of tax audit. It was an irony for me. If it is comprehensive, it cannot be analytical. If it is analytical, it cannot be comprehensive. So they wanted to have a comprehensive analysis of 44AB. I thought it was a signal to the speakers, comprehend your topic with selected areas, keeping in mind with the time and the gist of the topic, just in a lighter vein. If I am correct, the section 44AB was introduced in the year 1984. Because in 1985 we were fighting with all the commissioners and appeals on account of section 44AB. Real draconian law was 44AB when it was in 1984 as it was then. Then any payment that was not made on 31st March would not be allowed. So what about the sales that is taking place after 10 o'clock night on the 31st of March, on which you can pay the sales tax even if you want to pay it immediately only on the next morning? That was disallowed. Then only the next year an amendment was made to the 44AB section that it can be paid within the due date for filing of the return of income under section 139 was introduced subsequently. So when our appeal came, this amendment came. Then we argued before the commissioners, what is the rationale for this amendment? So the government itself could feel the imbroglio later and they have made an amendment. And any benevolent amendment should be taken retrospective, not prospective. So it is applicable for the assessment year, earlier assessment year also. Of course, they said they could not adhere to that argument. You better try your luck in the tribunal, and we got it one in the tribunal. Of course, later. I'm not going to discuss about the threshold limits, etc., because all our everything is now, especially the advent of so many softwares and learning portals, You are all aware of the basic conditions where 44AB applies, where 44AD applies, where 44AE applies, etc. Yes, sir. Just I have given in my paper regarding the threshold limit only as an introduction. And there was a question when the trusts are running business for the purpose of the objects of the trust, whether 44AB will be applicable to the business category of the trust. Then it was categorically decided. Of course, a later amendment came. Earlier, some two decisions were given that if it is a business, it will come under section 44AB. But there we have the opinion that the exemptions are covered under section 11, 12 and 13. And the chapter 4D has no connection with it. But now after the amendment of the earlier 2 years, now some of the provisions of the chapter 4AD also steps into section 44AB in disguise, especially disallowance under section 40A3, disallowance under section 40A, 1A. The two things come under the, and it is being taxed at the marginal rate of 115 BB. So the section comes there. So there is a tint of business element also, application of those sections in the trusts also. So whether this threshold limit will be applicable to the trust itself, no. Trust is completely governed under section 11, 12, 13. So that will not be applicable, threshold limit will not be applicable to trust. So pinning down those points, I have given my first observation. Principal question right from the beginning is whether the audit under section 44AB is a ritual. Is a ritual or an assignment. Whether it is a privilege or a penance. தபஸ்ன்னு சொல்கிறோம் இல்லையா, அது வந்து ஒரு தபஸாக எடுத்து அந்த ஆடிட்டை பண்ணுறோமா அல்லது ஒரு ஃபெஸ்டிவல்ஸ் மாதிரி ரிச்சுவல்ஸ் இது பிட்வீன் த August, September, October are the period for tax audit, so we will celebrate 3 months just like ஆடி கொண்டாடுற மாதிரி கொண்டாடி முடிச்சிடுறதா அப்படிங்கும்போது the saddest and the ironical point is that due to some of the non-cooperation of some of the clients also, it has become mostly a ritual. It is a ritual, but we have to openly admit it. If you put the center of the palm over the center of the heart and ask whether we do justice to the audit under section 44AB, it will be a blanket no. That is my honest opinion. Of course, there may be difference of opinion. The advantage, main advantage which we have gained from the introduction of 44AB is the level of fees that is we are charging from the clients. That is the one advantage which a slightly higher level of fees we are able to charge 44AB. Before going into certain classes, I would like to highlight the importance of documentation here. Because as a certified peer reviewer and as a research, I had the privilege of attending the peer review training under G. Narayanaswamy at Hyderabad. The legend of the institute, G. Narayanaswamy, he took us class for about 3 hours about documentation on audits generally. And he touched the points on tax audit also. So the documentation is a very, very important aspect in discharging our functions. Now, of course, it has to be read simultaneously with the ethical standards also now, because our professional ethics speaks of documentation also. So we have to maintain adequate, even said that they are not more than enough, adequate documentation for the work we do. In corporate audits, we used to come across this checklist pattern, audit programming, then execution level things. But usually, that is a tailor-made program for having corporate audits, company audits, and other statutory audits. But such a kind of thing we have never prepared for a tax audit under section 44 AB. Of course, I have been instigating a checklist right from the beginning. My office, send the checklist in advance to the clients. Let them fill up all the columns and points, whatever is possible by them at their end, let them do it. Then we will take care of the rest. Why you should make a documentation, especially after the advent of the NFRC. Now, lot of cases are foisted against the chartered accountants, both civil and criminal. Many chartered accountants have been arrested in North India also on professional negligence, misreporting, etc. So, we are not able to actually gauge what is misreporting and what is not properly reporting. There is a difference between what is not properly reporting and what is misreporting. Misreporting shows the direction to criminality. Not properly reporting shows its direction to the civil side. So we are not able to understand where we are misreporting or where we are underreporting, etc. So to save ourselves from the possible perils from the Institute of NVC, where they say there has been a gross professional negligence and discharging duties, we have to have at least some documentation for these audits. In your documentation, whether you have to cover all the issues, no. At least primary issues you have to. But that I advocate getting first an engagement letter is the primary thing. Because a tax audit is not a legal statutory audit. It is a contractual obligation. So there should be a permissible contract between the SSC and the auditor. So get an engagement letter from the, as a formality you get it. You need to fix the fees, etc. But at least in the lighter pattern of the corporate management letter, you get a management letter from them expressing there is a management that you are appointed as tax auditor. And you can clearly say whatever you say, it is the responsibility of the management to maintain the accounts. It is only to express an opinion on all these things. They won't read all those things. They will just sign and give it to you. But it is only for our safeguarding. That is, you have got a proper engagement letter. This engagement letter should be the starting point of the documentation. Then you have a checklist. A checklist can be a global checklist which covers all the areas of all the types of business, etc. My sincere request is take the audit as a tapas. Let us not compromise. Let us not, because those days where, of course, if I remember, I don't know, Ravi remembers, Karunagaran was the deputy commissioner some 25 to 30 years back. He was a Carolite. I would like to highlight one instance. The auditors, at that time it was manual filing of 3 CBs. Do you know what the auditors do? Yes, no, not applicable. They have 2 sheets and they will give it in the tabal and get an acknowledgement. Afterwards, they will replace the original papers with proper profit and loss account and balance sheet. And those days are gone. Now we are uploading electronically with all these attachments. That was not there. So what Mr. Karunagaran, then the Joint Commissioner, Deputy Commissioner, then there was no post as Joint Commissioner, Additional. The Deputy Commissioner was directly below the Commissioner. He was in charge of Dindigul. And he wanted to make a survey on selective cases on the 31st October was the due date filing for then it was 31st October for 44 AB. Due date, filing of audit report were both on the same date, 31st October. Now it is 1 month ahead, 30th September, 31st October. He sent the inspectors and the officers to selective trade concerns to call for the books of accounts. Books of accounts were not there. But they have filed 3CBCD form in a manual form. Then when the Deputy Commissioner asked where are the books of accounts, he simply told that it is with the auditors. Then immediately directed the officers to go to the auditor's office and get the books of accounts. The auditor said the books of accounts are with the assessees. Both of them were taken to task. There were no books of accounts. The very first question, first part of the 3CD was list of books of accounts maintained and audited. They give their book, ledger, vouchers, passbooks, etc. Then they called for the 3 chartered accountants and said, what happened? We want to take criminal action against. Then they said they came in the last minute, they didn't give books of accounts, they admitted. So, fortunately, I was on the day with him. He was just discussing with me. You see how these chartered accounts are like this. I want to refer the matter to the ICA as well as I want to give a criminal complaint also. What is your opinion? See, now it's a very delicate situation. We have to save our brothers. At the same time, we cannot say the department is wrong. Then, see, they gave 24 hours time for them to wait. And I told them, all the 3 were youngsters. Very, very new to profession, about 2 to 3 years. Then I requested Karnagaran, they are youngsters, sir. If you punish them, their entire future will be put to task. Give them warning and leave it. If they repeat it, then you take for action. But he put them under hot water for about 2 days. That what happened to them. Then he called for them and said, reprimanded them. If I see next time, Katam, told. So, what we say is, I'll be jumping here and there, making a connection. Now let us take the audit report under section 10B for the trust. List of books of accounts maintained, they ask. Now in the 10B initial part, you have to make a comment about whether the books of accounts are maintained at the registered office, or else where the books of accounts are maintained, whether proper resolution has been passed by the trust, whether such a resolution has been filed with the jurisdictional income tax officer to say that the books of accounts are maintained at such other place other than the registered office. See, the questions are framed after a bit. Then there is a drop down. They want us to commit what are the books of accounts maintained, what we have seen, what we have not seen. The drop down. Now, how will you fill up those? Purchase vouchers, purchase journals. They ask so many, about some 12 to 15 drop downs are coming. So my suggestion is that please tick yes only to what you have seen. Only yes to what you have seen. Don't put yes to all the things. If you have not seen all things, sister. But whether maintained, you can give a leverage. Yes, maintained. Where it is not maintained, you clearly say vulnerable documents which are not maintained. You simply say minutes and books of accounts. No trust maintain minutes. Other than larger trusts like TVS, they maintain properties. So don't commit that they maintain. Then you say maintain, you can say yes or no. When then you say you have not maintained, and the last column I say yes, I have seen it. So it's a very, very, very risky filling up that form 10B. While writing books of accounts maintained, documentation again I say. So have a clear documentation of what you have seen, what are maintained, what you have seen, what you have not seen. Then take that in a documentation, and with the help of the documentation you will fill up form number 10B. That question is not with form 10BB. 10BB does not ask about the books of accounts maintained. What you have seen, they don't ask it. Because 10BB is applicable for gross receipts up to 5 crores. The above 5 crores you have to apply for 10B. So documentation aspect, I am putting it very clearly that you have to make a proper documentation of what you say. Now coming to the main classes, of course, you see there are about I think now it's 44 classes are there, 3C, BCD. The last of it which being the GST particulars, which you have got. I would like to touch the 44th class now first. That is total payments made by the SSE. Total payments out of which then you have to break up as GST suffered, exempt, non-GST, then you have to make a... Now I want to know how these breaks up are taken by us. Can anyone tell you in any of the cases how you have done it? Total payments, then bifurcation. Whether you depend upon the work that is being done in an Excel sheet by the SSE, or you do the job of bifurcating all those things. Mostly, many of the audit reports, I see a disclaimer that the SSE is not maintaining proper records or Excel sheets to maintain all this, hence not reported. Whether giving a disclaimer on many points is a professional misconduct. அது தப்பாக வருமா அது அப்படிங்கிறதுக்கு வரும்போது நம்ம இன்ஸ்டியூட் கைடன்ஸ் நோட் பார்த்தீங்கன்னா எப்பவுமே இட் வில் பி வெரி சேஃப் லையிங் கைடன்ஸ் நோட்டு. தப்புன்னு சொல்லாது, ரைட்னு சொல்லாது, நீ பார்த்து பண்ணு அப்படின்னு சொல்கிற மாதிரி இதில் வந்து you can rely upon the SSE's declaration and report it accordingly if you feel it proper, or if you not feel it improper. இது ரெண்டில் ஏதாவது ஒன்று வந்து நீ ஃபில்லப் பண்ணிக்கோ அப்படின்னு சொல்லுங்க. அப்போ what is the purpose of introducing this class 44 here? The government wants some data. If everybody gives a disclaimer and say, we are not able to do it. For example, 48.3. There we give a disclaimer. We don't know whether it is an account pay, crossed check or a draft, so we are not adequate evidence is not in the possession, so we are not able to do it. The same thing applicable to tools. Of course, bank transfers, electronic media transfers, okay. Otherwise, instrumental transfers, then you have a disclaimer. You come to 40A2. There is a question which says payment to related persons which you feel excessive. Who is to decide that it is excessive? Then the question of deciding the excessive, then you leave a note for inner documentation. I feel it is not excessive. I feel it is. If you feel the comment that it is excessive, then you have to dissolve it. So if you say it is not excessive, you have to justify it. Then I have a proper documentation for that. So see, these are the chronology of events where disclaimers, we can't just go on giving disclaimers and then say we are safe. No. Disclaimers should be given only where it is finally not possible to give a very correct data. Otherwise, you can furnish the data with an observation. It is not a disclaimer, with an observation to the maximum accuracy possible. Figures have been compiled. That is how I am giving. to the maximum accuracy possible, figures have been compiled from the data provided by the assessee. Anyhow, the assessee does not maintain any classification registers or documents for giving out these figures, if you do it of your own. Instead, otherwise, you can put it get it in Excel sheet, get it signed by the assessee himself, and the assessee has produced it. I rely upon that. Just like a stock valuation statement, you just rely upon that, I relied upon that. So, the question of answering your observation depends upon the 44 is if it is voluminous, total payments, what about depreciation? Is depreciation a payment if it is debited to profit loss account? How will you match it? Then the question of reconciliation arises. You take the total of the profit and loss account, you see the total payments. Payments may be journal, payments may be by cash or check or documents. Then depreciation, amortization, some allowances you put it. Then if you take those things also into payments, then in your observation class you have to tell these accounts have been taken into account for computing the total expenses. I prefer doing it because now it is a system managed processing. If it is the total expenditure is different from the profit and loss account, then send on 139.9 immediately. So, you put all the expenses and then give in the observation class, depreciation, other expenditure are also considered in the total payments to reconcile the total balances. So you take a safe stand that you have considered everything. It will be possible when either scrutiny comes or when 139 comes or a clarificatory letter comes, that will come to your rescue. Then, so for that we have to take proper notes and documentation early then. So which are the, next I am coming to the key areas where we have to focus our attention or where we compromise. See, some of the audit points are mostly done on a compromise basis. The first thing which I feel is closing stock valuation. The closing stock valuation, many of the accountants become chartered accountants in reducing profit by immediately reducing the closing stock and having a profit which the assessee wants. Especially with the introduction of GST and taking input credits, etc., or where there are transfers from an institution, trans credit you take wherever that. The closing stock valuation plays a crucial role. In the current year, I have one problem with one jewelry case. You know, the skyrocketing rates of gold. On a turnover of 100 crores, the profit is now 20 crores. Because they've been holding old jewelries which is purchased at 1,200 rupees, 1,300 rupees, 1,400 rupees, etc. The increase in the turnover is not on the increase in the volume, increase of the rate. So the quantity handled is less. The old stock is that, because whether here also we have the problem of FIFO and LIFO. First in, first out and last in, first out. We always follow first in, first out only. Last in, first out is not recognized except for selective trades. Now on getting this profit and loss account, I wanted them to exactly value the closing stock. They said, we have got an average cost method, we have put it. Is the average cost method is only for this year or for the earlier years also? So earlier year it was cost or market whichever less, now it is an average cost. Now there is a shift in the basis of valuation of closing stock, which you are compelled to report under section 145. Method of accounting, there is a cross mistake. You have to put it now. What will happen if you don't do it? You just close your eyes and think of section 270 capital A. The bomb is there. Either misreporting or underreporting. Both the things 270A where the tax is 60% plus the penalty is 10% automatic. No question of going it. Now after working all these documents on guard, the closing stocks gets inflated by another 5 crores. Because right from the beginning they have been undervaluing the closing stock on some method or a method. And we give the benefit of doubt to them on a compromise basis that okay, at least near to the closing purchase rate they have come. Okay, we will leave it. And only 1% of the cases is selected for scrutiny. 99% goes off. So it also passes through the CPC and 143.1 and we get an order. They are also satisfied, we are also satisfied. Now how to adjust these profits? Now what I have advised them is, you come with the closing stock. If you again reduce it, the next year opening stock will get reduced and the profit will be just cascaded to the next year. You are not totally wiping out the profit. You are just shifting the profit of this year to the next year, next year to the next year, next year to the next year, that's all. So this is a very checkmate point. You come and finish it. You pay one-time tax. And you have a tax planning. Going for a heavy capital expenditure like installation of a windmill, getting 40% depreciation on the cost, etc. You go for it. Because you cannot just write expenditure 500 rupees and 1000 rupees and then reduce the closing stock. Because it is multiples of crores. So you need a bypass only in crores. So you go for a windmill or you go for a power purchase agreement with some of the top people and then get a... See, where the outlet also should be big, like the inlet. So that is I have discussed about the methods of valuation, etc. Now, genuinely asking, are we reporting an ICDS now? I would like to get any answer from any of the CS. On ICDS versus AS2. Are we making an honest attempt in making a report on ICDS versus AS2? Including me not. They are not able to do it. Because ICDS does not want any adjustment in the books of accounts. They have to make an adjustment only the tax computation statement. And there will be a gap always, like the old AS 18 under the Companies Act, isn't it? Timing difference, you make a deferred tax liability or deferred tax provision, just like that it will also come into the non-corporate sector also here. So better close down it on. All right sir, we have got so many partners, what you do? You get a stamp paper on the old date, infuse so many number of partners, give your own payment to gifters, give them salary. That is also plugged next year. The partner's salary and the rest will come under TDS. The worst portion is, I am touching your portion, sorry. You have to compulsorily finish it every on 39. Because the due date for payment of TD is also 39, isn't it? At the worst 31/10, before the due date filing of the return. You can't have an account on 31st March and plan for an enhanced salary for the partners and interest for the partners or commission or whatever by name, a glorious name you call it, you do it. It cannot, it's not possible. So the government is actually pressurizing you to come to normalcy, realities. So this is a time where you at least translate all the things into realities and go for it. So the closing stock valuation, I feel it is a very dark area where we have to focus our attention. We have to educate our clients to see that they at least a reasonable valuation is given. Of course, I don't think so far as many of the 44AB cases which I have seen or which I have been consulted, never the ICDS column has been filled. Not only for this, for works contract, for anything else, ICDS is not, because it is a bit harsh. You can go to ICDS only when it is beneficial to us. So I have made a short comparison between the ICDS and the AS2 and what we are not doing it. I have given it in the script, I have given it. You can have a time and then you can go through it. The next is, which I would like to touch the point, is the conversion of capital asset into stock in trade and vice versa. Especially in real estate, this is a problem. They purchase some properties, keep it with them as a capital asset, and then they have a joint venture agreement, they go for a business conversion of the capital asset. When the capital gain arises, what is the cost of acquisition of the capital asset when it's taken into consideration? So this is where we had some 2-3 tough cases with the department. What is the cost to the owner? Assuming you are inheriting, you are getting down an HUF property. Then you make a partition, you get into property. Then you convert the property into a real estate business. Or no, you can see now a lot of jewelry shops, small jewelry shops. In some families, they have got about 500 sovereigns. Then they start a shop. Why should I keep these 500 sovereigns at home? Let me do some business. There, the personal assets are converted into stock in trade. So the point of taxation, the working out the cost of acquisition, then after conversion, now that point of indexation is also now going to be given a farewell. But I would like to have the consultation of Mr. Gopal Raju about this, doing away the index section. There is a lot of questions that are arising, whether it has been done away with or not. We had some articles in the Tax Guru also. Non-indexation is available, but the memorandum explaining the budget is very clear that the indexation has been done away with. So, with the forethought on all these budget amendments, we are having a report on this 44EB. Assuming my personal land of 5 acres worth rupees 5 crores now market value, which I got for nothing from my grandparents. Now it is converted into a stock in trade. Now you have to give a report under 44EB conversion. What is the cost of acquisition now you will give? Because we are going to look at the capital gains. Now cost to the previous owner. Take it as a cost to the previous owner. Suppose it is somewhere 1950s. Then you take the 2001 valuation and then you proceed with this, all these things. You have an indexation now. Okay. Assuming, suppose somebody has availed a benefit as a long term of a part of the property there, then will the cost will apply? Then it is a debatable question. Nobody should have got a benefit. Then if slightly comes down to you, then you can have the long-term capital, because whether it is short-term or long-term, the decision whether it is a long-term or short-term, at the point of conversion we have to take it. Then at that point, the point of taxation arises. Put it vice versa. Stock in trade converted into a capital asset. Then at the time of sale, they have given 2 options of payment of taxes, recognizing the income. So we have to be very careful in making a point on those two items when it is a capital asset into a stock in trade into a capital asset. So that area I dealt with by detail. You can go into the script and then say, just for you to, it's a refresher only. I'm not taking class, it's a refresher. Then the third point is now what I will try to touch is what the 43B, that too now 43H, MSME. MSME is a very, what you call a taxing point for us in reporting. Hitherto we have been reporting only on delayed interest payments. That also a disclaimer was given. We don't know whether they are MSME registered or not. The point has not given, so we are not able to verify. Now, after the introduction of section 43H, if you say that you are an MSME, if you give your list of the MSME purchasers, sellers, etc., list down and then make a class, then you cannot say in the interest class that I don't know MSME. So now both the classes are to be run parallel. The interest class as well as the 43H have to be done parallelly. So if you commit that is an MSME point, then you have to see disallowance of interest. Then disallowance of interest, then you have to have a complete total definition of the MSME. Then the question of interest, penal interest, number of days crossed, 3 times the RBI rate. So these things comes in. So here now you have got an additional responsibility of this 43H also. If the payment is not made within 15 days or 45 days. The MSME Act says it is 14 days or 15. If there is no agreement for 45 days, then it is 15 days. That is what the law says. It is only 15 days. Can you now enter into an agreement with everybody for 40 days? This is applicable from 1/4/2023 purchases also. Are there any payments on 23? Now what we have advised is, take a seal, terms 45 days and affix on all the invoices. It is a simple contract. A contract can be even oral according to the Indian Contracts Act. So you put a stamp there, terms 45 days, then it is an agreement, it is a contract. Because all the other clauses, all the other points, date, serial number, etc. also binding as an agreement, then the seal will also binding as an agreement. It is 45 days. Try to do it. So in between the year, if there is a delay in payments, you can understand that it takes place within the year. So it gets set auto-adjusted. So we have to concerned only the purchases that are effected after February 15th. That is the 45 days calculations we did. So in the reporting aspect, we have to be doubly careful when you report on the interest section as well as in the gross payment section. Another question is, will it be possible for us to disallow all the purchases and enhance the computation? That is a $1 million question now. I'll be happy if Mr. Gopal Shashu should address on that point. How? Because disallowance, you can't, if you don't disallow it, then you have to give a reason for it. Where you will give that reason? Because there are no separate annexures for 3CD to be uploaded. So you should find a berth in 3CB only. In 3CB, there are 3 points are given. Whether it's a qualification or a comment or an observation. Whether you give it as a comment or whether give as a qualification. If you give it as a qualification, then you have to disallow. If it is given a comment and observation, whether it can be given as a comment or an observation. Because it's a statutory requirement. It's a statutory requirement where you cannot say your comment and then say it is not disallowed. So this is very grave situation. We don't know how we are going to react because many of they have not done it. Otherwise, we get a comfort letter from the SSC that we are not able to identify our MSMEs, etc. So we are not able to produce all these particulars and give that as a comment in the 3CB itself. Since we are not able to get the particulars from the SSC, we are not commenting on that point. Let it be taken for scrutiny and let them answer all this. Because it's a very grey area, how we have to disallow, etc. Because purchases are in multiples of lakhs. For a turnover of 100 crores, they show a profit of 1 crore. The disallowance will be about 20 to 30 crores again. Of course, it will be allowed in the year in which it is paid, subsequent year. So we have to make a proper education to the SSC as well as to the accountants also, because the accountants rule the business people now rather than chartered accountants. Then this area, of course, I'm just touching this, so where we have got a point. Whether 40A 1A prevails over 43H or 43H prevails over 40A 1A. That is another issue that is being recently raised. 43H prevails over 43A 1A because under 43A 1A disallowance is only 30%. Under 43H the disallowance is total. So the expert opinion says the 43H prevails over 40A. Then some of the classes, reporting classes, we touch it. Class 35 regarding the suppose now the use the software, the drop downs are observations and reply come automatically. Account pay, cross, the associate we are not able to verify. Closing stock is not verifiable. Proper records maintained, it is not possible for proper records. Personal explanation, it is not proper to verify. So you simply click and copy the verbatim reply and then you fill it. Proper stock books are not maintained. Then column 35 will give opening stock with purchases, trading, closing stock. So this is contradictory. So when you take a closing stock as a point, ICDS, AS2, method of valuation of closing stock. That is, you ask whether how raw materials are valued, how finished stock are valued. Is there a change in method of valuation of closing stock? No. Then if you give automatically no, and then in the comment you say there is a change in the basis of closing stock. These are all, what I say is negligence on our part, enough area for bookers for negligence. So that's why I give all those things. And the primary goods are to be reported. Suppose in a mechanical spares shop, will be 500 items. So you see the turnover and say maximum 10 to 15% of the turnover which product accounts, you can give it. You can give a referendum. That's only main products have been dealt with. The other products we are not dealing with it. So they give a concern item. And that is also in a production. 35B we say in a manufacturing concern also. The wastage, we are not able to work out the wastage. So on those days you have to give an outturn statement you used to give. That is what is given in the 35B as a yield, wastage, etc. There also, you see, you always put your mind on one point. If the closing stock is all related questions relating closing stock, you put it and then see this is a chronological. Don't come by point. If it is 43B, you take all the 43B lock, stock and barrel, then try to report it. Let us not answer one, let us see, then we come to the class 33, we will answer one class. When 48.3 comes, 48.3, then also simultaneously go to section 216 SS, 216 T also, wherever cash payments are involved, wherever cash payments are, you take all the clauses at a single stroke and take a note and fill it up. You will not miss it. That is how we do it. A related item, how many questions are related to a single point? You take notes and then all the points you finish it first. Then finally you take a preview and see that all the points have been answered. Then take a UDIN and then you can upload the reports. Then the questions of deemed dividends, especially for companies, it's a very deemed dividend, you simply say no. But viewing the company's balance sheet, where the directors have drawn funds in excess of the reserves and surplus, then deemed dividend automatically comes into play. You need not say it is a deemed dividend is charged or no. So before filling up, that is a mechanical the corporates mattum, you analyze the balance sheet and find out, take a list of the directors and their relatives and find out that they are having drawings within their capital balances, and there also you see the debit should not precede the credit. Single debit, if it precedes the credit, deemed dividend will apply. You take a loan of 1 lakh of rupees, the next day you repay that 1 lakh of rupees, it gets squared up. Still deemed dividend will be applicable for the 1 lakh which you have taken earlier without a balance. So your credit should always precede the debits. That is a very vital point in 220. So you have to see the if we take it as a global concept view on it, you see whether the total drawings are within the reserves and surplus of the balance sheet. Otherwise, 222 will apply. Especially in corporates, when you do company accounts, you will fill up these columns. You please see, you analyze the balance sheet and get a declaration from them, or get better the account statements of the directors and their relatives and keep it in your records so that you have seen it. Again, I say peer review, documentation, professional negligence. So we have to see all those things. We are not bound to safeguard the clients. First, we have to safeguard ourselves. Then I have discussed with class 44 early. Then public charitable trust. I have given a long thing because I prepared a worksheet for a trust last year when the new amendments were forced. We had a worksheet and we had a meeting of our trust clients, and then they gave this worksheet, and then you should maintain these accounts like this. So there are also trust reporting. You see, please pay attention to in the trust either 10B or 10BB cash payments and TDS. Very vital. You have to merciless. You have to be merciless on those points because they are taxed separately. They are taxed separately at 30% plus. So, wherever there are cash payments in excess of 10,000 rupees in a revenue expenditure, then what we simply advise our clients is to split up. Please don't ask them to simply stop with splitting up. Also, let them create necessary vouchers for splitting up on that point. Let the split up vouchers all be prior to the date of the last payment. Have you, suppose you are making a payment of 28,000 rupees on a single date. You break it means the 28,000 rupees is made on 30th March means all your prior voucher should be prior to 30th March. The 30th March should be the culminating for that 28th, because otherwise your cash balance will be affected. So you ask them to prepare a vouchers, and wherever you feel that there has been an excess cash payment of 10,000 rupees, where it has been adjusted with splitting up, you collect copies of the vouchers scanned and keep it in your records. That is what we do. ஏன்னா நாளைக்கு ஏதாவது சர்வே வந்துன்னு வச்சுக்கோங்களேன், ஒரு டிடிஎஸ் சர்வே வந்து ஏதாவது ஒரு சர்வே வந்து போது கேட்டார்னா ஆடிட்டர் தான் ஸ்பிளிட் பண்ண சொன்னார், நாங்கள் ஸ்பிளிட் பண்ணிட்டோன்னு போயிடுவாங்க, ஒரே வாரத்தில் போயிடுவாங்க அவங்க. ஸோ இட்ஸ் பார்ட் ஆஃப் டாக்குமெண்டேஷன் that you get all these copies of the vouchers. Just like that, all these copies of these capital investments for trust, you get vouchers. Because you know, cash payments for capital expenditure will not be allowed as an application now. Will not be allowed as an application. So in working out 85% has been spent on the application, you have to eliminate all the cash payments and the capital expenditure you have to eliminate. So you have, no filtering is possible in Tally. You can easily filter and find out what are all the cash payments you can make no? And ask them to make narrations very clear wherever some adjustments are made in the accounting entries. You ask them to make proper narrations in the Tally itself. This payment is for 22 labors. Single payment has been made in a single voucher. None of the payments exceed 10,000 rupees each. You make a comment, then a separate disclosure from the client is not necessary when it finds a, especially now, audit trail has come with for corporates, isn't it? Whatever adjustments you make, you have to report in the Caro now. A day will come for the non-corporate also, this will follow up. So wherever you make an adjustment, you get copies and give it. Where you have no invoices for any major capital expenditure, please don't allow it as an application in the trust mainly. We don't do it because there should be a proper voucher or a receipt for a payment. If it is not available with you or not able to produce, don't show it as an application, because it is very crucial in deciding the 85%, especially cases where it is on the margin. Suppose if you take away that expenditure, it will go to 84% means that is very crucial. If the application is 95%, you take on expenditure, it does not matter. If it is on the border of 83 to 85, 85 to 86, then it is very crucial. You have to work out the application percentage first and then find out. Then you work on the reverse. What are the capital expenditures? What are they maintained? Within the capital expenditure, what about 40A only? What will you do for it? There is no 40A only is adhered to a capital. For example, contract wages for centering. You don't deduct tax. How will you work out for the application now? Whether you eliminate that expenditure, for a capital expenditure you cannot tax, 30% you cannot tax, 40 only. The safe portion is to eliminate it from the application cost. Whether to eliminate 30% as the application or 100%. Because if you tax, you will tax only 30%. 70% you will allow. So if there is no application, then 40 only, then you disallow only 30% as non-application. So these are all certain vital areas where we feel that you have to apply our mind double. Again, I repeatedly say, documentation is the backbone for our audit. Have a clear documentation, have a checklist. We have to, because there is a lot of difference between a duty and a responsibility. We say it is the duty of the assessee to maintain the books of accounts according to accounting principles. It is my responsibility. Responsibility always takes duty with it. But a duty need not take a responsibility with it. That is the major difference in our thing. So, keeping in mind with the negligence, the latest issues revolving the chartered accountants, documentation, ethics, peer review, training our juniors. The last part of is you to put them in a good bracket and bring them out as your product, you have to inculcate all things into them and then make them hard work and make documentations clearly. So that is very important. These are the areas. See, in fact, a day seminar should be conducted for tax audit. Some 4 speakers should come and then should take class by class analysis. Each one should take 6 or 7 classes and how go deep. There are a lot of case laws. Plethora of case laws are on tax audits. We don't have time over it. So anyhow, we thought my main intention of coming to THENI is to see the chartered accountants here, to see the venue, to have a change of place. We were visiting Madurai, seeing Trichy, Dindigal, etc. It's a new place. It's a very beautiful. We don't feel that. We feel we are in a cine theatre. Cine theatre, mini theatre. So very good, and it is a very good thing that is always the podium will be on the rise. Here the podium is down, we can able to see also all the audience. So I have done a very little justice to my topic. I have not covered anything. It was only a sharing of information between us, and don't take too much into it. I have given some workings papers, a script, only for you to follow where you have got a doubt. And I thank Mr. for giving this good opportunity to meet you all. It's a nice place, a nice atmosphere, a nice audience, nice ambience, and a noiseless meeting. The noiseless meeting. So I thank every one of you for giving this golden opportunity. I would like to listen to Mr. KRISHNA Raju and to take some inputs when I go home. Thank you. Thank you very much. Thank you.
Any doubts, you can clarify with sir for 5 to 10 minutes. Please raise your doubts. I will start with the first primary doubt, very basic doubt of thanks sir. Sir, we have 44 AD and 44 AB. The criteria, the threshold limit 3 crore and in the 44 AB says 3 crore, they said that respect be more than 5% cash, like 95% should be a bank transaction like that. So they said 3 crore. Earlier it was 1 crore limit.
1 to
1 to 10. Like. So my question is, assuming two scenario. Scenario number 1, if anyone has a turnover of 2 crores 50 lakhs, all are cash transactions. Point number 1. So other particular AB is applicable.
yes.
Obviously. Suppose 50 lakhs. Turnover is 50 lakhs. Other particular AB is applicable. Or
44 AD is also read with 44 AB only. So 44 AD, there is no audit under section 44 AD. 44 AD is always read with 44 AB. Primary section is 44 AB only. So there also then it is 44 AB audit. Read with 44.
turnover is less than 1 crore, but all are cash transactions.
If the profit is more than 8%, you need not to go for an audit.
So something nobody.
If the profit is more than 8% and the turnover of 50 lakhs, then you need not go for an audit. Only when the profit is less than 8% on a 50 lakhs turnover, then it is read with 44 AB, then you have to make an audit.
Yes. Thank you, sir. Any other doubts, please?
Yes. Provided you don't have a taxable income. Even in the audit representative class, you will have a class that filling up yes, no. That if more than less than 5% is, then you can see audit no. You can do it. Will not be applicable. 8% will be applicable only where it is also read with 44 AD. tax audit will be applicable. If he does not do it, if the department finds out, then he have to pay the 271B penalty. Otherwise, but as per law, it is applicable.
But less than 8%.
8%, the presumptive include privilege up to 8% you should offer. Have 2 crores and offer more than then no problem. Don't offer 8%.
For small assessees, they are running say 30 lakhs to 10 lakhs, and they are not having 8%, and they are offering less. So in the case also, they have to go for 44.
Whatever you say, legally they have to come to 44 AB. Don't it, the department does not say no, I have not received any cases where even where 44 AB report has not been given. Some cases they commit the last minute with a turnover of 70 lakhs or 80 lakhs. Then I will come say I will not give a tax audit, but I will pay the return. This process and orders as long as the notice. The tax audit.
The restriction, the threshold limit of turnover is not applicable. The SIR told like 70 lakhs, 80 lakhs. If I didn't opt for presumptive tax income for previous years, and now also I am not opting, so and the income also less.
See, you should understand one has been elevated to 2. 2 has been elevated to 3. அப்படித்தான் பார்க்கணுமே ஒழிய அது கீழே வந்து எல்லாமே அது முன்னாடி 1 கீழே உள்ளே தான் இருந்தது, இப்போ 2 கீழே உள்ளே தான் இருந்தது, இப்போ 3 கீழே உள்ளது அப்படித்தான் பார்க்கறாங்க ஒழிய அப்படி அதுக்கு மட்டும் தான் அப்படி கிடையாது. The scaling limit is 3. அதுக்கு மேலே கிடையாது.
சார் அப்போ 3 crores நான் புக்ஸ் எதுவும் மெயின்டைன் பண்ணல, அப்போது 6 or 8% நான் டிக்ளேர் பண்ணிக்கலாம். 3 crores 95% என்னோட ரிசிப்ட்ஸ் அண்ட் பேமெண்ட்ஸ் பேக் சேனல்ஸில் இருக்குது, அப்பையும் டேக்ஸ் ஆடிட் வராது இல்லையா?
Up to 10 crore.
நோ டேக்ஸ் ஆடிட், P&L பேலன்ஸ் ஷீட்.
I have done it for a turnover 10 crores. 98% of bank transactions, they have audit.
ஒரு 2-3 கேஸ் நானுமே இதை தான் பண்ணிகிட்ருக்கேன்.
இது பண்ணலாம்.
That's why I started with this question. This is a doubt basically for Jansi. That's why I started with that. Point of view, any questions?
The stock valuation documents, average stock எடுத்து போடான்னு சொல்லிடுறோம். பட் அவங்க எடுத்து கொடுக்கும்போது டேலியிலேருந்து எடுக்கிற ஸ்டாக் அப்படியே எடுத்து கொடுக்குறாங்க. அதில் கொடுக்கும்போது பார்த்தீங்கன்னா the tally is by default maintaining the average stock. That average it is taking for the entire financial year. So அப்போ வந்து
Constantly followed throughout the years, you have got a case.
சார் இது இந்த கொஷனோட கண்டினியூஷன் தான். மெயினாக காடமும் பார்த்தீங்க அப்படின்னா அது ஸ்டாக் எக்ஸ்சேஞ்ச் மாதிரி தான், மேலே போகுது கீழே வருது. ஆவரேஜ் போட்டாலுமே வந்து மினிமமே டச் மாட்ட மாட்டேங்குது, மேக்ஸிமமே டச் பண்ண மாட்டேங்குது. ஸோ இந்த கேஸ் வந்து இயர் எண்டில் அரவுண்ட் தட் இயர் என்ன இருந்ததோ அதை தான் நாங்கள் ஒரு வேல்யூஷனாக எடுத்து அதை மாதிரி போடுற மாதிரி இருக்குது. சாரி சார், நோட்டீஸ் வந்தால்
அது நீங்கள் வேர் இட் இஸ் சீசனலி ஃப்ளக்சுவேட்டிங் வேல்யூ இருந்ததுன்னா நீங்கள் ஆஃப் த 2 எதை வேணாலும் மார்க்கெட் ரேட் எடுத்துக்க தான் பெட்டராக இருக்கும். மார்க்கெட் ரேட்
But they have to come to the ICDS or something, sir. ICDS where?
ஐசிடிஎஸ் இருக்குது, பட் ஐசிடிஎஸ் வந்து இதுக்கெல்லாம் அப்ளை பண்ணணுமாங்கிறது சென்சிபிள் கொஷன். இப்போ காடமும் இந்த மாதிரி சீசனல் ப்ராடக்ட்ஸ்க்கு வந்து ஐசிடிஎஸ் அப்ளை பண்ண முடியாதுங்கிறது என்னுடையது. இப்போ ரெகுலர் கமாடிட்டிஸ்க்கு பண்ணலாம். இப்போ வந்து 500 rupees இருக்குது, அப்புறம் 300 rupees வருது, அப்புறம் 800 rupees போகுது, அப்புறம் 300 rupees வருது. அப்படிங்கும்போது எய்தர் ஆவரேஜ் இருக்கலாம் அல்லது ஏன்னா பிகாஸ் தி டாக்ஸேஷன் பிரின்சிபல் இஸ் வந்து கன்சர்வேட்டிவ் தான். இந்தியன் சிஸ்டம் ஆஃப் டாக்ஸேஷன் வந்து கன்சர்வேட்டிவ் பிரின்சிபல். கெட் தி லோயஸ்ட் ப்ராஃபிட் புக்ஸ் ஆஃப் அக்கௌண்ட்ஸ் அண்ட் பே டேக்ஸ் லீகலி. அப்போ நீங்கள் வந்து ஸ்டாக் மார்க்கெட்டு காஸ்ட்டு மார்க்கெட்டோட கம்மியாக இருந்தது, மார்க்கெட் எடுத்துக்கோங்க, யூ பே த டேக்ஸ். காஸ்ட் கம்மியாக இருக்குது மார்க்கெட்டோடன்னா காஸ்ட் எடுத்துக்கோங்க. Because it is not a charity. The effect will be on the next year, that's all. As the topic, it is shifted to the next year. ஆமாம், அது நெக்ஸ்ட் இயர் போகுது. அதனால் வந்து அதுலலாம் நீங்கள் யூ கேன் டேக் தி லோயர் வேல்யூ.
ஆவரேஜ் 1 year எடுத்தாலும் ப்ராப்ளம்
இல்லை, பட் இட் ஷுட் பி கன்சிஸ்டன்ட் த்ரூ சேயிங்.
நெக்ஸ்ட் இயர் ஆல்சோ
த்ரூ அவுட் த இயர் இருக்கணும். பாஸ்ட்டில் நீங்கள் ப்ரூவ் பண்ணணும், இனிமேல் சொல்லக்கூடாது.
ஓகே.
ஒரு 5 வருஷமாக நான் அப்படி தான் பண்ணிகிட்டு இருக்கேன் அப்படின்னு தெர் இஸ் நோ மெத்தட் இன் தி சேஞ்ச் ஆஃப் அக்கௌண்டிங். அப்போ இங்கே 45 ஏபி ரிப்போர்ட் கொடுக்கும்போது நீங்கள் வந்து காஸ்டார் மார்க்கெட் ஃபியூச்சர் லெஸ்ன்னு கொடுக்கக்கூடாது அங்கே நீங்கள் அது அந்த இடத்துல கொடுக்கக்கூடாது. அங்கே கொடுக்காம நீங்கள் இதில் சொல்லணும், அப்சர்வேஷனில் சொல்லணும். ஒன்லி இந்த மெத்தட் ஆஃப் இது கன்சிஸ்டன்ட்லி ஃபாலோடு. எந்த ஒரு மெத்தடுமே கன்சிஸ்டண்ட்டாக ஃபாலோ பண்ணும்போது வேரியேஷன் எனக்கும் வரதுக்கு வாய்ப்பு கிடையாது இல்லையா. வேரியேஷனுக்கு வந்தது 145(2) செக்ஷன் மெத்தட் ஆஃப் அக்கௌண்டிங் வந்து நீங்கள் ரிப்போர்ட் பண்ணுறதெல்லாம் வரும். அதில் அது ப்ரைஸ் வராது.
One more doubt, sir. This is the conversion of capital into stock in trade. So the year of conversion, the rate of FME is assuming 100 rupees. So later the assessee is selling the plots. That time the rate is some higher 4,000 rupees goes. So the obviously the business income falls between 4,000 to 100 rupees. Like so, அதில் வந்து turnover வந்து அந்த 44 AB tax rate applicable ஆகுமா சார்? Although based on the turnover.
When you do this trade,
So we go for 44 AD there. அந்த டைமில் 44 AD போகலாமா நம்ம? போகலாம். Obviously Ravindran sir has to play. Out of doubt.
44 AD 44 AD.
அது அங்கே
Because it is only stock in trade in India and it's to consider. So
சாரி 44 ஏபியில் ஃபாலோ பண்ணிகிட்டே வராங்க. ரியலிஸ்டிக்காக த பிஸ்னஸ் ஹஸ் கம் டவுன். அந்த பர்டிகுலர் ப்ரீவியஸ் இயரில் வந்து இட் இஸ் கம்மிங் அவுட் ஆஃப் டேக்ஸ் ஆடிட். ஸோ அந்த டைமில் நம்ம ஒரு நார்மல் கேஸாக ஃபைல் பண்ணால் அதோட இம்பேக்ட் ராமிஃபிகேஷன்ஸ் எப்படி இருக்கும்? நார்மலாக தான் இருக்கும், இல்லை கிராஜுவலாக டவுன் பண்ணணும்? இப்போ 50 இயர்லேருந்து சடனாக எப்படி கல்விருக்கு அப்படி ஒன்றும் இல்லை.
income tax, what you earn on that year, you have to pay. Right now, the fall should be, if the department asks, it should be explainable.
they may issue for 143. We have to
எக்ஸ்பிளைனபிள்னு நீங்கள் சொல்கிறீங்க இல்லையா? வந்து இந்த விதமாக இருக்குது. லாஜிக்கல் எக்ஸ்பிளைனபிள் அது வந்து அது அவுட் ஆஃப் எப்படி சொல்கிறது ஒரு கண்டிஷன். அப்பா நல்லா பண்ணிட்டு இருந்தாச்சு அந்த பிஸ்னஸ். வென் த சன் அண்டர்டேக்ஸ் அவனால் பண்ண முடியல, இதற்கு ஹீ இஸ் இன் லேர்னிங் மோட். நெக்ஸ்ட் இயர் ஒரு வேலை டாக்ஸ் ஆடிட் போனாலும் போவேன். அந்த மாதிரி கேசஸ்
Mostly there will be no problem. Mostly, even it is explainable தானே. அதாவது ஜெனட்டிக்கலாக நீங்கள் எக்ஸ்பிளைன் பண்ணாலும் பரவாயில்ல. ஏன்னா யூ ஹேவ் டு கிராஸ் தி பிரிட்ஜ் ஒன்லி வெட்டி கம் டு இட் இல்லையா. டிபார்ட்மெண்ட் கொஸ்டின் கேட்டால் தான் அந்த கொஸ்டினை ஜஸ்டிஃபிகேஷன் வரப்போகுது. அதுக்கு ஐ டோன்ட் திங்க் now the department is broad based. Less than 1% of the cases is taken for scrutiny. அதனால் இப்போ ஆலாமி நீங்கள் வந்து 1000 crores டர்ன் ஓவர் கவனிச்சுட்டு அடுத்த வருஷம் 5 கோடி காட்டுன்னு வச்சுல, இட் இஸ் அலாமிங். தேவன் இஷ்யூ நோட்டீஸ். பட் கிராஜுவலாக 1000, 950, 900 அப்படியே வந்ததுன்னா இட் இஸ் கிராஜுவலி டிக்ளைனிங் இல்லையா. அதனால் இட் வில் நாட் ஹாவ் எனி இம்பேக்ட் ஆன் தட்.